YouTubers! Mike Martin's here. Mike Martin's channel. Guys, thanks for joining me. Markets are open for another, 15 minutes. And I'm just, kind of bumming around the store, helping customers out. A lot of people coming in, just buying things, I guess. It's Boxing Day, so people are spending their Christmas money here. And it's really good. And towards the end of the day, towards when the market starts to close, I kind of take a glance at my portfolio. I've been buying gold and silver on drops. It dropped? Oh, well, you got to sell, Mike. No, I'm buying more. Oh, it dropped again, Mike. You got to sell. I'm buying more. Oh, silver's going to crash. I'm buying more. But you know what? I don't know if anyone's been looking. I looked at my portfolio this morning. I'm like, woo! Merry Christmas! And I was blown away when I saw that this morning. I saw it a few days ago. It was going up. And I'm like, good. I'm out of the red now. I'm in the green again. And then this morning, what an awakening. All my junior miners, all my junior silver, all my junior gold miners, and my big gold miners like El Dorado and other big companies like that. Man, they're just starting to pick up pace here. So what is going on, people? Well, I turned into Kitco and Market Watch and other places, because they're the only ones that really follow gold and silver close with a magnifying glass and see the trends in the markets to find out what's really happening. Gold and silver take off. Could it be a jailbreak? It could be, or it could just be another flash in the pan. You never know, guys. For weeks, the metals have been showing bullish signs of breaking out on the upside. On Tuesday, we reserved our silver position from short to long. As silver broke out and became a buy. We are now long silver, looking for a trend to continue and will stay long for as long as March. Silver holds above 1730. So this is a good sign. This is actually a very good sign for silver and gold holders, people that are invested in silver and gold. And we've talked about it again many times on Mike in the Night. We talk about gold and fiat currencies and how they're looking at banning cash so they could manipulate numbers and hold your money in and then go into negative interest rates. You know, if we go into negative interest rates, gold's going to go to the moon and silver, because everyone's going to be latched onto precious metals because it's physical, especially if they get rid of cash. So gold has been showing bullish signs as the last couple of weeks, but continued to fail at key levels. That ended on Tuesday as gold broke the reserve from short to long, and now we are long gold and silver, expecting the markets to test higher levels. So that is right there. Here is another one. Gold and silver bulls propel prices to 7-week high. So I bought on four major drops, gold and silver, with my silver miners. I just kind of even it out and then buy a little bit, and every time it goes down, because it's bargain, right? To me, especially with junior and gold and silver junior miners, for me, in my opinion, there's a huge ceiling. Lots of room to move. You go to these multi-billion-dollar gold companies, they have no more ceiling. They're at the ceiling. They have no more room to grow. Is it going to go to $8 billion? Unless gold goes to $7,000 an ounce. I don't see that happening, right? So there's a lot of things you need to factor in, and make sure you get a good financial advisor to help you out and do this stuff. I'm not giving financial advice. I'm just talking because gold and silver are going to be the it might be the way to gauge money, like really gauge money going forward. Because right now they've always put gold and silver on the back markets, not the back markets, but the back burner for the longest time. They keep people away from it as much as possible. They always show, oh, look at the dividends here. Look at this stock. Oh, this could be your next thing. No, but I think gold and silver is where it's at. I've always believed gold and silver is where it's at because of the devaluation of the currency. And gold isn't at realistic level. Gold should be sitting at $3,500, $4,000 an ounce. If you go to the what do you call it? The U.S. debt clock, usdebtclock.org. It tells you what gold should be at per ounce and silver should be at per ounce, realistically hedged against the inflationary currency that we're sitting at right now. So here it is. Gold and silver prices are moderately higher in 7 weeks highs in early U.S. futures trading. Thursday, gold is holding above the key of $1,500 level, and silver prices moved above the $18. So let's hear, we're live right now. The markets are open for another 8 minutes right now. Let's refresh this and see. It was at 14 cents and see if it goes. Refresh that. 14. There it goes. At 13 now, it's back at 14. So it's holding steady. Gold is holding steady above the $1,500 mark. Let's move into this one. Gold price marks highest finish in more than 8 weeks. Again, gold is rallying. I expected gold to start breaking away come spring because I was going to buy more gold and silver stock and junior miners and all that. I do have physical silver and gold and stuff, bars and stuff. I do own them. It's not like I avoid owning the physicality of them. I do own it, but I like to kind of take the chance with silver miners, junior miners, and all those guys because they really have the potential to break away because 16, 20-cent shares do have the potential to get to the next level if they're smart, if the companies are smart, if they get bought out. There's a lot of potentials, right? So gold futures settled above $1,500 now Thursday, making it a third session of gains in a row and the highest finish for the precious metal since the end of October. Bullish gold investors say bullion has benefited in recent trade on doubts about a China trade deal. In recent trade on doubts about a China trade deal being completed. Concerns about the implications of President Donald Trump's recent impeachment by the House and worries about the stock market valuations being stretched, at least in the U.S. Gold and silver are rising on the apprehensions over U.S.-China trade deal and Trump and his impeachment proceedings. Physical gold demand is still lagging gold investment demand, wrote Chintan K., chief market analyst of Insta Consulting in Thursday research note. So gold for February delivery GCG plus 770. Wow. So that's where they're kind of forecasting where things are going to go. Precious metals, yeah, they're going to go up. There's just too much Ponzi going on, too much market manipulation, too much market spoofing. There's more silver and gold certificates on paper that you own X amount of golds in Deutsche Bank ounce bars, and they don't have them. For people are trying to mail in their requests to get their gold mailed to them because they rather have the physical gold in their hands than having it in Deutsche Bank or Bank of America or JP Morgan or whatever, and people aren't receiving their gold or silver. And it's been going on for many years now. They keep saying, well, we sent it. What's the tracking number? Oh, we didn't put tracking on your gold. Woo! What's going to happen? Physicality, it's going to be there. And with them banning, looking at banning paper money and going into, I wouldn't say crypto, but being it all digital. We're already digital with their debit and MasterCard and Visas and all that stuff. They want to just make it full-on digital. Digital deposits from your employer, digital deposits from like direct deposits and stuff. Money transfers between friends, all money is going to be documented and logged, unless you're dealing with crypto where it's untraceable. Let me know what you guys think in the comments below. Where's gold and silver headed for 2020? I think it might slightly break away, then dip, then break away again, until this whole... let's wait for the 2020 elections, too. It's going to be a really wild ride down in the United States. Let me know what you guys think. Comment below. Thanks for watching, and don't forget to hit the subscribe button.